Welcome to Spiedel's California Minute. I'm your host, Catherine Sedan. This week we're covering some of the propositions that will be on the ballot in November, including Proposition 40, the wealth tax. Spiedel's federal and California tax update will get you updated on everything you need to start the upcoming tax season, and there are live webinar and in-person seminar options available. Go to spiedel.com for details. The Secretary of State has released the list of statewide measures that qualified for the November ballot. Proposition 2 is placed on the ballot by the legislature and would increase the Budget Stabilization Account cap, also known as the Rainy Day Fund, from 10% of general fund revenue to 20%. It would also subject withdrawals from the Rainy Day Fund to the state spending limit and would exclude deposits into the Rainy Day Fund from the limit. Proponents of the proposition argue the extra funds will be used for public schools and to pay down California's debt to the federal government for its pandemic loan to the California Unemployment Insurance Fund. Proposition 3 would make permanent the 2012 voter-approved tax rates of an additional 1% to 3% for high-income taxpayers, which are currently set to expire in 2031. The tax generates between $5 and $15 billion each year and is used to fund K-12 schools and community colleges. Proposition 37 would authorize the California Housing Finance Agency to offer second mortgage loans to qualified buyers. Qualified buyers would be required to have been residents of California for at least 1 year, agree to occupy the home as a primary residence within 60 days of closing, have an income at or below 200% of the area median income for a similar-sized family, and provide a down payment of no less than 3% of the purchase price. These second mortgage loans would be limited to 17% of a home sales price, and homebuyers would have to secure a first mortgage to cover any remaining costs of the qualified home. Proposition 40, also known as the wealth tax, would impose a one-time tax of up to 5% on taxpayers and trusts with covered assets valued over $1 billion. Covered assets include businesses, securities, art, collectibles, and intellectual property, but excludes real property and some pensions and retirement accounts. The initiative would allocate 90% of these tax revenues for healthcare and 10% for food assistance or education-related programs. The tax would apply retroactively to taxpayers residing in California as of January 1st, 2026, and would be due with the taxpayer's 2027 tax filing. The initiative would allow taxpayers to pay the tax in 5 equal installments beginning in 2027, with each subsequent payment subject to an annual deferral charge of 7.5% of the remaining unpaid balance. Proposition 41 would require state laws or ballot initiatives that levy a new special tax enacted after January 1st, 2026 to undergo state audits every 4 years to determine program effectiveness. The initiative would also prohibit the state from enforcing any tax exempted from the state spending limit that's enacted or effective on or after January 1st, 2026. And Proposition 42 would amend the California Constitution to prohibit future provisions of the state constitution enacted on or after January 1st, 2026 from imposing, enacting, or authorizing taxes on the ownership or control of retirement holdings, individually owned assets, and other forms of personal savings, whether held directly or indirectly. The initiative would also prohibit retroactive taxes that authorize a tax on conduct, activities, or status that occurred or was present prior to the effective date of the state law or constitution. This would also apply to taxes based on residency. This proposition challenges the provisions of Proposition 40. Under the California Constitution, if provisions of 2 or more measures approved at the same election conflict, the measure receiving the highest number of votes prevails. This means that if either Proposition 41 or 42 receive more votes than Proposition 40, the wealth tax would not take effect. Master California's tax minefields such as residency, community property, and apportionment, plus get a conformity update at Spiedel's Critical California Tax Issues webinar on August 26th. You can see a full list of topics and get registered for this 2-hour webinar at spiedel.com. That's all for this week. Join us next time for another episode of Spiedel's California Minute.